Hello everyone and welcome to the Stock Martin channel. I have an awesome video for you today. You are going to be watching the CEO of Lucid Group doing an interview in Judea, Saudi Arabia. And just most recently, Peter Rawlinson, the CEO, has just signed a huge deal with the Saudi Arabian government. Take a look at this huge interview, and I think you're going to get a lot out of this video. Thank you so much for watching, and I can't wait to talk to you on the next one. But check this out.
Peter, thank you for being with us, and congratulations on these plans. So help us understand, why does it make sense to open in Saudi Arabia? Were you given any incentives to open, or were you attracted by the kingdoms? Peter, thank you for being with us, and congratulations on these plans. So help us understand, why does it make sense to open in Saudi Arabia? Were you given any incentives to open, or were you attracted by the kingdom's plans to support the mining of battery-related minerals?
Well, indeed. Well, first of all, I'm honored to be here today at Cake, at this seminal occasion, really to celebrate our plant in the Kingdom of Saudi Arabia. Absolutely, we were awarded $3.4 billion of financing and incentives, and this is financed through the Ministry of Finance, through SIDF, and ministries throughout the kingdom. The fact that we were able to secure this significant sum is largely due to our long-term relationship with the Public Investment Fund of Saudi Arabia, who are our long-term partners.
Help us understand, are you producing in Saudi Arabia all parts of the vehicle? Is it an assembly plant? Are you producing batteries there?
No, this is a complete vehicle plant. We are creating the powertrain, the key electric powertrain. We're constructing the Lucid battery pack, our motors, inverters, Wonderbox technology, all the integrated electric vehicle powertrain plus the car. This is complete vehicle construction, and this is the true value that we're bringing here to the kingdom.
Peter, what's your ownership in this plant versus your partners, and when are you planning to start production?
This is a wholly owned Lucid plant, designed, developed, created, and will be wholly run and owned by Lucid. We plan to start construction very, very soon, and we plan to start construction of cars at the plant in 2025, building up the volume through 26 to 27 to 150,000 units per annum.
And we know that you have a 10-year deal with Saudi Arabia to deliver 100,000 cars. Will this plant cater only to the local market?
Well, this plant is strategically positioned here in Cake with strategic trade routes into Europe and out to Southeast Asia. So this is ideally suited not just to serve the local market here in the kingdom, but the NEMA region and other markets further afield.
And what's the potential of having access to minerals needed that are present in Saudi Arabia and needed in the production of electric vehicle batteries?
Oh, it's profound. I think that the Kingdom of Saudi Arabia is renowned for particularly aluminum production and plastics, and these are key ingredients for our cars.
Let's discuss now your global operations. We know that the company is facing some issues in delivering the cars due to supply chain disruptions. We know that Lucid lowered the annual production target to 12,000 cars versus original prediction of 20,000 cars for this year. When do you expect things to look better?
Well, I think the first thing to recognize is that everybody is now acknowledging that we have the best car in the world, the Lucid Air. It's an amazing car with over 500 miles range. Our challenge now is to ramp up the volume of this incredible machine. We're facing global supply chain challenges as is all the auto industry and other industries, and we're working assiduously to overcome. Our near-term challenges with commodity goods are being resolved, and we're looking forward to hitting our 12 to 14,000 units that we're targeting for production this year.
So what's your targeted market share for next year?
Look, the market is so uncertain, the supply chain challenges are so profound, it's really difficult to make predictions. We're working as hard as we can to ramp up production, and we're looking forward to significant growth through this year and through next year.
So you are talking about these challenges, and obviously these challenges has incurred additional costs for the company. We know that you have raised your prices by 10%. Does this cover a big chunk of these additional costs incurred by the war, by COVID, and by the supply chain constraints?
Well, I think that we need to be cautious how we view this. Any new operation starting has to cover exceptional costs starting up. And we're not in a phase where those costs reduce when we create a cash cow type of situation in the long term as our product matures. So we have these initial startup costs, which are being exacerbated by a world phenomenon of inflation. And unfortunately, our price structure has had to reflect that.
Mr. Peter, you are a luxury electric vehicle. Are you planning to pivot beyond that by introducing more affordable models in the future?
Oh, absolutely. We start with a high-end product because the first car defines the brand. And also, it costs less to industrialize a relatively expensive car, and proportionately more to industrialize a more affordable car. That's why we start with a high-end car first. But we're bringing in Pure at $87,000 later this year, a Pure version of Lucid Air. So we're moving towards more affordable products, and mid-decade we'll introduce our mid-size platform, which we will build here in Cake, and that will be much more affordable. And that's what excites me so much about this mission, this sense of being able to bring more affordable, sustainable vehicles to a broader market centered here in the kingdom.
We discussed the challenges facing electric vehicles, and we know that electric vehicles need a lot of cash, and now we are in the middle of challenging market conditions as interest rates are going up. What are your financing needs in the coming future, and will you rely on your shareholders, or would you seek the capital markets? Capital or debt market?
Look, we're a growth company. We're in a growth phase. We're in a growth company. We're a technology company in a period of intensive growth, and clearly that's going to require more capital. But I am very optimistic. We have something hugely differentiating. We have the world's most advanced EV technology, and we have scalable technology, and that is very attractive for investors. We have a strong cash position. We have over $5 billion in cash at the moment, as we disclosed at our very recent earnings call. And that will see us well into 2023. So I'm very confident that we have a strong position to grow this exceptional opportunity, this exceptional company. And we have the big differentiator, which is our technology. This is our key USP. This is our commercial advantage, our technology. And this is a technology race. There is not sufficient emphasis upon the technology race, which is about to unfold in the next few years.